Okay, in this example, we are going to look at some non-monetary exchanges. The Pile Line Company recently traded in a pickup truck for a newer model truck. The old truck's book value was $1,000, which had an original cost of $13,000 and accumulated depreciation of $12,000. Its fair value was $800. Pile Line paid $14,000 to complete the exchange. So we need to prepare the journal entry to record the exchange, and we're assuming the exchange had economic substance, and then we're also going to do the same entry, but we're going to prepare it if the fair value of the truck was actually $1,500 instead of $800. So let's start out is, first of all, we need to figure out what the value of our new truck was. So that's going to be our new asset. We also know that we are going to have to close out and take our original asset off the books. So we, of course, do that by reducing our accumulated depreciation. And we are going to have to credit our old truck. And we'll just label that one old. We have, we're also going to, of course, deal with cash. And then we're going to have a gain or a loss. So let's start off with getting the old one off. We have an original cost of $13,000, so we're going to credit $13,000 to get rid of that old asset off of the books. We are then also need to get rid of our accumulated depreciation, which had a balance of $12,000. That normally, of course, has a credit balance, so it now has a debit balance. Okay, so we've cleared that out, so that means we've got $1,000 left, right? Okay, so we're going to have a loss. So how we handle that loss is what we're going to calculate next here. So we've got cash, we paid cash of $14,000, right? So we know in total our entry has to equal to $27,000. We've got $12,000 of that done. So how are we going to calculate our loss? Well, we have $1,000 of book value left, and our fair market value is $800. So we are going to have a loss of $200. Okay, that's going to leave me my value of my truck equaling the $14,000 of cash plus the $800 fair market value of the old truck that we traded in. Okay, so that's going to give us our $27,000 worth of debits and offset by our $27,000 worth of credits. Okay, so we calculated, we eliminated that. We had a $1,000 book value left on the truck. We had a fair value of $800, so we knew we were going to have a $200 loss. That $800 fair value then becomes part of the value of our truck in addition to the cash that we paid. So let's take a look and let's do the same thing. We're going to have our truck, our new truck, we're going to have accumulated depreciation. We are going to also need to credit our cash again, and we're also going to have to get rid of our truck, our old one. Okay, so let's write off that truck first. So again, it's going to be $13,000, just like before. Our accumulated depreciation didn't change, so we're going to clear that out by debiting accumulated depreciation for $12,000. We still paid cash of $14,000. Now we need to calculate the value of our truck and our gain and loss. Since our fair market value of the truck is $1,500, we're going to have a gain, and we're going to calculate that gain by taking our $1,500 fair market value, oops, not 15,000, minus our $1,000 book value. So we're going to have a gain on this transaction of $500. Our truck is going to be equal to $14,000 cash plus the $1,500 fair market value of the truck that we traded in, so it's going to be 15.5. Okay, so our entries debit to credit equal to 27.5. The whole key on this example is we're part of the exchange is the fair value of the truck. It's not just strictly a cash transaction. So we need to determine the fair value of the truck. That's going to get added to the cash value to value our asset. Okay, so it's going to be our 14,000 plus the fair value of the asset. Our gain and loss is going to be determined by that fair value minus our book value. Okay, so we can have a gain or loss that way. So that's how we do a non-monetary exchange. So we're looking at determining the fair value and including that and getting that gain or loss and readjusting our value of our new asset.